Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex market outlook for the week of May the 31st and June the 1st. Now, we are going to be in a holiday short week here, so we're going to run through some things here with the Forex market, see how things are looking. Now, what we want to do here first, though, I think this week is we're going to have a quick little recap of some of the things that took place last week because we had an extremely volatile week. Now, what I've done here is I pulled up some of the recommended trades that I put out this week in the Forex market and the commodity markets, and let's just have a quick look at what's been happening. Now, in the last excuse me, 6 days of trading, let's start with the US-Canadian pair. If you remember last week in the Forex market outlook, for the week, I suggested that the US-Canada is starting to make a top around this 107.55 area, and we're likely going to see a push lower. Now, I made that assumption largely based on the predicted medium and long-term differences being heavily overbought, a corrective move. We can see that we have this lone candlestick, and this is a classic false break. Now, what I also talked about in the US-CAD pair was that the further the market moves away from the 18-day predicted moving average, the more likely it is to retrace to it. So what we can see is based on that trade, I've drawn a trend line down excuse me, down here using the Vantage Point profit calculator, and we can see that from the recommendation it then continued to move down 310 pips. So if we were doing this based on standard lots, this would be about a $2,700 profit. Now, what I also want to point out here is that the market completely basically hit a brick wall when it hit this 18-day predicted moving average, and this is why I like to use the triple EMA crossover to identify key levels of medium and longer term support or resistance. So that's our first one of the first recommended trades of the week. Now let's keep going forward with that and look at a few others. Now, you remember, I believe it was on Tuesday when I put out the British pound Swiss franc. We can see here I've drawn a trend line there also. Now, we were looking at getting into buy positions. Those trades were active at the 166.14 area. We can see the market then proceeded to move up about 229 pips, and you can see it on this trend line going up right here, and that booked another, this is actually a wrong calculation, I'm not sure why that's up there, but 229 pips, that's actually about $2,290 on a single lot. So a lot in foreign exchange is $100K or $10 a pip. So $10 a pip, $2,290. Now again, in this particular trade, I was using separate indicators, not overbought, not oversold. I was using the predicted MACD and the predicted TSI along with this recent triple EMA crossover. Now, going back and reviewing this trade that was put out this week, we can see that the crossover took place on here, and if we look above here, the next day after this crossover took place, I began to put out the longs. Same as the predicted true strength indicator. Now, again, a very profitable trade, but these trades that I'm talking about here now, again, very important that I'm not going back a month, back into April or, early part of May and picking out a profitable trade and then talking about it. This is in real time. This is based on predictability. The market came to these prices, and then we entered into the trade again and in real time, and it's actually happened. So it's very interesting when it's done from a predictive nature. So if we're looking at this again, we've got about 229 pips. Very nice move. So now what we would do here also is I would look at another similar position that I put out on the same day, which was on pound dollar. I suggested we've made a base in the Forex market outlook of last week. I suggested we've got a base at the 142.50 area. Long positions look good, and again I based that off of a heavily oversold signal and across. We haven't actually got the crossover from the from the predicted true strength indicator, but we are sitting in this heavily oversold territory, and the predicted MACD actually did make the cross, or was in the process of making that cross in this negative 200 area. We can see then this trend line going up here, buying into that, but then again, by having the triple EMA crossover up, we can identify an area that is of interest to us that could produce a problem, which is again the 18-day predicted moving average at this 146.24. Now, in a counter trend position though, we were able to book 383 pips on this trade for $3,830. Another excellent trade. So if you're looking at these trades, you can see that we've compiled quite a large number of pips in the middle of the week. Now, looking at another market, the commodity markets in the light sweet crude, despite all the market analysts and everything else, I was putting out buy positions on, again, the light sweet crude. We can see this contract right here off the recommended area of that 68 area that I talked about. It then proceeded to move in the next 44 trading days. It moved up $8.13. So on a per contract basis, that's $8,130. So if you look at just these 4 recommended trades that I talked about during the course of the previous week, that would total almost $17,000, $1,686, about $16,863 based on individual contracts. Now, depending on how much you're trading, it could be more, it could be less. But the point is, what I'm saying is that we're able to, I was able to call the direction of the market, even though extreme volatility. Most of the market analysts were talking about crude going to $50 a barrel or to at least $60 a barrel, when in actual fact, based on my analysis here, I was saying the exact opposite. We can see that the predicted true strength indicator crossed over to the upside here, and that coincides with my recommendation on the buy here. The predicted MACD was running flat, but again, the predicted medium and long-term differences heavily oversold. So again, what it's really kind of neat about this is that this happened this week. All of this happened. If you're looking at the recommended trades, if you're looking at the software in this particular fashion, then you can see that there's been some very substantial moves. And again, I'm not talking about things that happened in the past. These are all based on future events that are going to happen. These recommendations were made before the market actually went to these entry points, and again, that's very important because we're looking at predicting what the market's going to do. We already know what it's done, or if we look at, even if we open up the Vantage Point software and I were to point out a trade where Vantage Point, which I often do, point out that there's a very good move here, it's not exactly the same as what we can see has happened here this week, just to point that out. Now, the reason I'm mentioning this, I was asked by a couple of emails that have come through to me on Trader Planet